Welcome to the world of finance, where cities like Paris and London take center stage in a fierce competition for European dominance. Market capitalization, commonly referred to as market cap, is the total market value of all of a company's outstanding shares of stock. It's calculated by multiplying a company's shares outstanding by the current market price of one share. This powerful metric offers a snapshot of a company's size, financial health, and its potential for future growth. Historically, London has been a formidable force in the financial world, with its London Stock Exchange being a key player. But Paris, with its Euronext Paris, has been gaining ground, especially in recent times. In March 2023, Paris's stock market boasted a market cap that exceeded London's by a whopping $250 billion. This shift hints at changing tides in global finance. But as of early October, London's financial district is experiencing a revival, bridging the gap with its European counterpart. So why does this matter? These two cities aren't just battling for bragging rights. Their financial significance has ripple effects throughout global economies, impacting investors, businesses, and even everyday individuals. Dive with us into this captivating battle to discover the nuances that shape these financial giants. But before we move forward, click that like and subscribe button and hit the notification bell to stay updated with our latest videos. This channel will keep you updated on the most intriguing videos on economic topics around the world. Brexit has been a pivotal event in shaping the financial landscapes of both London and Paris, significantly impacting their respective stock markets. Brexit has indelibly left its mark on London's stock market, casting a shadow over its financial predominance in Europe. The city witnessed some dents in its stock market valuations, and the Paris market capitalization takeover that's occurred has been largely attributed to the economic ramifications of Brexit. The UK's separation from the EU shook investor confidence and triggered a wave of financial relocations, as numerous firms moved their European headquarters or parts of their operations from London to cities within the EU to maintain access to the single market. The Paris market took advantage of London's Brexit-induced vulnerabilities and saw a bolstering of its financial sector, as some businesses relocated from London to stay within the EU regulatory framework. Despite the Brexit-inflicted wounds, London displayed formidable resilience, with its stock market bouncing back and nearing the market capitalization of France this month. Factors such as advantageous movements in oil prices and the pound played pivotal roles in favoring UK stocks and subtly nudging London back towards reclaiming its erstwhile financial supremacy. Brexit introduced a new dynamic to the London-Paris financial rivalry, with each city navigating its unique challenges and opportunities in the unfolding post-Brexit scenario. So is the world's least favourite market on the verge of regaining its title as Europe's premier financial capital? These are signals that London's financial sector is rebounding and might soon surpass Paris. The dollar value of the principal indices of these two financial hubs is currently only marginally divergent. More crucially, big entities are once more casting hopeful glances towards the market along the Thames. In the previous year, the valuation of the French stock market lingered around $3.5 trillion. However, this year it has reduced to $2.93 trillion, owing to escalating economic anxiety in the vital Chinese market and the dissipating surge of elite Parisian stocks. Conversely, the London stock market's same valuation is currently at $2.90 trillion, eagerly tailing its continental competitor in the quest for the European and global financial capital title. Merely a year ago, a study by Bank of America dubbed the UK as the most unfavorable market for global investment. Currently, the atmosphere is shifting, and strategists from organizations like Barclays, JP Morgan, and HSBC perceive that the London Stock Exchange may finally experience a positive streak after years of wrestling with Brexit's shadows. Global funds continue to maintain a net of 22% underweight in the local market, indicating substantial opportunities for augmenting larger positions. Walid Kubmani, the chief market analyst of XTB's London branch, noted that the erratic behavior of the UK economy has previously directed investors towards alternative markets, but this trend might now alter. The primary reason the British financial market is prevailing largely results from its hefty reliance on energy corporations. With oil prices attaining their pinnacle levels since 2022, companies like Shell are witnessing a legitimate windfall. Their stock prices are nearing 5-year peaks, and signs suggest they have more to convey. Contrarily, the Paris stock market, which leans heavily on luxury stocks, is facing difficulties. Brands like Kering, Hermes, L'Oreal and LVMH, which have shattered popularity records in preceding years, are currently struggling amidst the worldwide economic deceleration, notably in China. These companies constitute nearly 20% of the CAC 40 index's entire value and have impeded its growth in 2023. It's also worth noting that currency comes into play when measuring the size of London's market against Paris in dollar terms. Sterling has fallen around 11% against the US dollar this year, while the euro has lost around 9%. Comparative analysis of the returns from the CAC 40, the British FTSE 100, and the American S&P 500 over the previous 2 years clearly indicate that the British market is spearheading in terms of returns provided. A depreciated pound, currently at 6-month lows against the dollar, also enhances this scenario. Given that 75% of the sales of companies listed on the FTSE 100 are generated outside of the UK, the diminished currency will unquestionably have a positive impact on their export outcomes. Despite the London stock market's notably improving position, it is yet to completely emerge from its adverse circumstances. Companies are still migrating to the United States, especially New York, with capital outflows amounting to a staggering $23 billion since 2023 commenced. Furthermore, despite its historically pivotal role in global finance, the London stock market substantially trails the United States. Data from the start of the year indicates that the New York Stock Exchange had a total market capitalization of approximately $22.65 trillion, nearly tenfold the current dollar value of the LSE. UK companies frequently opt to launch on US stock exchanges like the Nasdaq for various reasons, one dominant reason being access to a larger investor pool and a more extensive capital market. As the US possesses a large and liquid stock market, enticing global investors and offering enhanced visibility and liquidity for newly listed companies, which can be particularly appealing for technology and growth-oriented enterprises, Kudmani elucidated. Moreover, 70% of the biggest global initial public offerings in 2022 occurred in the United States on the Nasdaq exchange. The tech-dense benchmark hosted 156 new companies, collectively amassing $14.8 billion. In 2023, a year wherein the IPO sector is significantly subdued, one of the largest debuts also transpired in the US. This pertains to ARM Holding, a computer chip producer ironically originating from the United Kingdom. Kudmani concluded, the decision to list in the US can be motivated by a quest for higher valuations, as US investors frequently assign elevated valuations to tech companies, leading to potentially superior IPO prices, which can be favorable for both the company and its existing shareholders. The future landscape between Paris and London may be determined against a dynamic backdrop marked by technological advancements and the insistent pulse of globalization. Both cities, emblematic of financial might, are embroiled in the nuanced battle, juggling opportunities and challenges presented by these two formidable forces. Technological evolution has notably swayed the financial markets. Through innovations such as blockchain, artificial intelligence, and high-frequency trading algorithms, cross-border financial flows have accelerated, and finance has globalized further, allowing a seamless transition of capital and fostering international investment. On the one hand, this propels markets into realms of unprecedented growth, opening avenues for new investments and startups. On the other, it ushers in intricate challenges related to regulatory compliance, cybersecurity, and systemic stability, mandating markets to remain agile and adaptive. The London market is grappling with its own specific quandaries. As we mentioned earlier, despite being a historically dominating financial hub, recent years have witnessed a fretful exodus of companies deflecting to Wall Street. The allure of a larger investor pool, coupled with a more extensive and liquid market, has rendered the United States a more appealing destination for companies seeking to enlist on stock exchanges. This trend, ostensibly fueled by prospects of higher valuations, particularly for technology and growth-oriented enterprises, has invoked apprehensions regarding London's future prowess in the global financial arena. In contrast, Paris has navigated its own trajectory of the global financial market. Its stock market, leaning heavily on luxury brands, is now tethered to the economic whims of global consumer behavior and macroeconomic variables. While technological advancements facilitate the globalization of the Parisian market, amplifying its reach and enhancing its competitive edge, it also renders it susceptible to global economic fluctuations. For instance, economic perturbations in vital markets like China or shifts in global consumer sentiment could reverberate through the luxury-heavy Paris market, affecting its capitalization and global standing. In considering the Paris-London rivalry, it's pivotal to comprehend that both markets are submerged in a global financial ecosystem that is incessantly being molded by technological advancements. These innovations not only alter how markets operate, but also reconfigure the global competitive landscape, prompting markets to perpetually recalibrate their strategies to uphold their global standings. While both markets are striving to capitalize on the bounties offered by technological advancements and globalization, navigating through the entwined labyrinths of opportunities and challenges remains a complex endeavor. The capacity to harmonize regulatory frameworks with technological innovations, safeguard market integrity, and foster sustainable growth will be crucial in determining the future trajectories of these two financial behemoths. Simultaneously, external factors such as geopolitical stability, global economic health, and international regulatory harmonization will indubitably shape the future path and the ongoing battle between Paris and London. Whichever market adeptly maneuvers through these multifaceted scenarios, effectively harnessing technology and globalization while adeptly navigating through inherent challenges, will carve a prominent position in the future global financial landscape. We hope this video gave you a comprehensive understanding of the battle between the Paris and London markets. Let us know in the comments of your thoughts and opinions. As always, if you enjoyed this video, don't forget to like and subscribe for more in-depth content.